Hello and welcome to our special program live from the Bund Summit, Insights on New Economic Forces. And in this program, we'll be speaking to a range of esteemed experts to get their insights on the dynamics of global economic recovery. So this year's Bund Summit is held when the world economy emerges from the pandemic. The foundation of this recovery remains fragile, yet we're also witnessing a new wave of technological innovation that holds the potential to transform our industries and drive sustainable growth. So at this point, it's crucial to examine how to strengthen international cooperation, foster innovation, and steer the world economy towards shared prosperity. So to delve into these pressing issues, I'm very delighted to be joined by our first guest, Mr. Jeffrey Schott, a senior fellow at the Peterson Institute for International Economics. Thank you so much for your time today.
Thank you.
So Mr. Schott is a renowned expert on international economics and trade policies. I'd like to have your take first on the global economic recovery. What is your outlook on it, and how do countries navigate risks such as high inflation and debt?
Well, that's the big challenge that all economies are facing now. The actions that were taken to mitigate the effects of the pandemic helped in the recovery, but it also created distortions in the economy that require recalibrations. And some of the actions that are needed to lower inflation are being taken by central banks today, but there are other distortions caused by fiscal policies that will require a longer-term response.
For example, the debt level is rising rapidly.
Exactly. And when you talk about fiscal policies, there is always political influence on how you will do it. Politicians like to put money in people's pockets. They don't like to take money out of people's pockets. Right.
Indeed. So what is your assessment of the monetary policies adopted by major economies in the past few years? It seems that there are positive signs of the economic recovery. The U.S. economy is heading towards a soft landing, according to many experts at the summit.
Well, I think my colleague Jason Furman, who was President Obama's chairman of the Council of Economic Advisors, I think put it very well. Things seem to be moving in a very positive direction. The recession risks have been declining in the United States, though not totally eliminated. But the Fed seems to have taken control, acting aggressively, and sometimes with raising rates very high, which is unpopular for the general public, but I think necessary medicine to get inflation to come down. And we've seen a sharp fall in inflation in the United States.
It seems developing economies are taking a even more bigger hit from the pandemic. How do you assess their economic status at this point, and how do they deal with some of the spillover effects of the U.S. monetary policies?
Well, it's not just U.S. monetary policy. It's a combination of ingredients. But the best thing for emerging markets is robust demand and growth in the major economies. So the United States, and Europe, and China. And so certainly in China and in Europe, growth has not been as strong as hoped. There's still steps that can be taken to sort of boost economic activity. But while the growth levels remain relatively muted, I think this will have knock-on effects in developing countries, and so limit their opportunities. So this is something where you need engagement between the developed and developing countries, and very important to have contributions from the international financial institutions that are designed to deal with these global impacts.
And in your opinion, what steps can be taken to improve the global economic governance to steer the world economy towards a more sustainable future?
Well, that's that's a very big question, and it differs with regard to international finance, development assistance, and trade. In all areas, we need to do more. And indeed, one has to strengthen trust in the multilateral process. That has been hit hard, I think, in recent years because of conflicts among the great powers. The U.S.-China trade war has had a negative effect not only for both our countries, but for the international institutions, which have suffered as the United States and China went sort of a unilateral route in their disputes. So strengthening the trading system is important. Strengthening the resources available for the World Bank to deal with development challenges, to deal with the challenges of climate change and adaptation to problems in the environment, I think requires a stronger commitment by the leading nations. And this is an area where the United States and China have common interests.
Right.
And hopefully an area where we can work together, particularly in the area of climate change, to pool our resources, our talents, and our initiatives to help not only our own countries, but the world as a whole.
Well, talking about China and U.S., you warned in 2019 that the trade war between China and the U.S. could lead to an economic crisis. What is your assessment at this point of the impact?
Well, the impact has been negative for both the United States and China. I mean, imposing new protection raises prices, lowers growth, creates distortions in trade. We still have a lot of trade between the United States and China, but some of it has been diverted through third countries. Investment has changed. Many foreign countries have reduced their direct investment in the Chinese economy. But they have transferred that to neighboring economies that also trade heavily with China. And so there has been, as we have seen a fragmentation of some of the investment, we've also seen a consolidation of some of the supply chains that still depend heavily on doing business with Chinese companies. Some in China, some Chinese investments in the ASEAN countries in Southeast Asia. So, but clearly, you know, on balance, the trade war has not been helpful to either side. It would have been better to find another way of resolving our problems. That's water under the bridge. Now we have to see where we are now and how we can rebuild a relationship so that we, as American officials who have recently come to China to visit, have said we can work together cooperatively in areas of mutual interest. We can compete where we can challenge each other, and we can define areas where we have to agree, where we're going to disagree.
Well, talking about the path forward for China-U.S. relations, the two countries are now managing their differences, their competition carefully. What is your vision for the future of the two largest economies And how do they manage their differences? And how much do you think politics will play in this hampering pragmatic economic cooperation?
Yeah. Well, politics is certainly a constraint on reviving the dialogue between U.S. and China, and the politics of both countries. But I think there has been damage done to bilateral relations between the Chinese people and the American people that can be mitigated by resuming the dialogue that has been shut down, first because of the pandemic and second because of the political frictions. Resuming dialogue is critically important. Resuming people-to-people exchanges.
Like you traveling to Shanghai?
One of the reasons
the
that I felt it was very important to be here in Shanghai as opposed to be on a computer screen and participate as I had to in the last few years is to show that I view relationship building as important. That I present my views and I listen to the views of others here from many countries. You may not reach agreement, but importantly, I think by engaging in these dialogues, you avoid misunderstandings. And one of the biggest dangers, I think, in U.S.-China relations would be if Chinese leaders do not understand what is motivating U.S. policy, and if U.S. leaders do not understand what is motivating Chinese policy. And so the best way to deal with that is to have the exchanges which have resumed importantly between members of the cabinet of the U.S. government and ministers of Chinese government. Very important, I think, that when Janet Yellen was here, when Gina Raimondo was here, and Secretary Blinken, that needs to continue, it needs to deepen, and it needs to be complemented, importantly, by meetings together of our two leaders. There are opportunities to do that, and I hope that arrangements will be made so that President Biden and President Xi Jinping are able to sit down together face to face, as they have done many times in the past, and speak what's on their mind.
I certainly hope so. And talking about the fragmentation, we know that the WTO-centered global trade system is now witnessing some challenges nowadays. But in its recent report, the World Trade Organization pointed out that there are signs emerging of re-globalization. What is your observation of the dynamics?
Well, I mean, we have a revival of trade to some extent because of the economic recovery. But there are obstacles to expanding growth because of geopolitical tensions, because of increased protectionism, some in the name of national security, some in pursuit of industrial policies to promote industrial development and employment creation in certain sectors, whether it be semiconductors or electric vehicles, steel. And different countries have used different mixes of policies. I think this has created distortions and is one of the reasons why we face a crisis in the world trading system. It's very difficult to write rules to deal with these problems I tried to do that a long time ago when I was a negotiator for the United States and wrote some of the subsidy rules in the GATT in Geneva. But today, in order to get agreement in Geneva for the World Trading System, you really have to have the United States and China and Europe and several other countries working towards a common purpose. And it's more difficult to do that given the political environment. There are other countries that in Geneva that you would have to bring on board, and Russia will obviously be a problem, and other countries will pose obstacles. But I think it's a prerequisite that if there is any updating of the trading rules, that the United States and China have to agree on what is desirable moving forward. And we haven't gotten to that point yet.
Indeed, you have been navigating the very complexities of trade negotiations. Do you think the United States is still favored multilateralism when it comes to trade? Because I know you and you support the United States joining the TPP.
Yeah. Well, there are many levels of international engagement, and certainly for the trading system, working in the WTO is very important. Compared to the Trump administration, the Biden administration is much more engaged in Geneva. But the politics make it difficult to really invest in making change in Geneva. And so the U.S. officials have tried alternative initiatives, including the Indo-Pacific economic framework. In my opinion, it would have been much better for the U.S. to rejoin the Trans-Pacific Partnership, which President Trump withdrew from. That became the CPTPP. It is one of the most comprehensive agreements with regard to obligations and rights and benefits in the Asia-Pacific region. It has attracted interest for membership by many countries, including China. And it is largely based on U.S. law and practice over the years, and the opening of markets and expansion of rules to investment and services, intellectual property, labor, environment. So if you look at it objectively, there's very little reason why the United States shouldn't be in an agreement that's based on largely U.S. practice.
Yeah.
What I'm pleased is that so many other countries want to aspire to that standard. And I'm hopeful that other countries will be able to follow the path of the United Kingdom and negotiate the terms of their accession to the CPTPP. I think that will help build a platform for more open trade and investment in the region, and serve as a precedent for future broader multilateral efforts to update trading rules.
Indeed. Well, talking about the new trends in trade, what is your view on the impact of new technologies on trade, like digital economy, and also on the green technologies? There is a lot of debates about states subsidizing their own green industries and its impact on trade fairness.
Yeah. Well, I think that's a very big question, the way you asked it. But in general, what you want with regard to technologies is to continue to promote innovation. And so to pursue policies that support and promote that innovation. But that's not enough. then you need to have policies that will allow the broadest distribution and use of those new technologies. Very important, for example, with regard to green technologies. So what we have seen is countries have used subsidies extensively to promote the development of green technologies. They've also used some protectionism, import barriers to block trade in those technologies. So they're working at cross purposes. The new U.S. legislation, the Inflation Reduction Act, on balance is a very pro-climate piece of legislation. Lots of money devoted to advancing policies that will support mitigation of greenhouse gases. But there are some elements, as in any political process, you have to give a little and take a little. There are some protectionist elements to that impede the type of progress we would like. On balance, I think it's very supportive. So
how do they align the goals of climate action and promoting trade fairness? Well,
I mean, the subsidies are and the way they are contingent on certain other policies are designed by the politicians to build industries in the United States and create jobs in the United States. But in the area of climate change, that's not sufficient. We need a global effort to reduce to reduce greenhouse gas emissions. And there's been substantial innovation in many countries. And since the United States and China share the goals of reducing global warming, we should be working together, or at least cooperatively, to try to support new innovations in green hydrogen production, for example. There's a lot of work that's being done in China, in Korea, in Sweden, and other countries to develop steelmaking technologies that use green hydrogen. And that would be a very significant step forward.
Do you think the EU's anti-subsidy investigation into China's EV products will have a major impact?
I think it
well, let's set an example for
I don't think a major impact. I think the technologies are evolving quite rapidly, and so we will see a greater use of electric vehicles, and this is one area where there will be competition. Chinese firms have already taken a lead in technology, and I think if the technology is going to evolve very quickly. So in order to stay ahead of the curve or in the forefront, you have to continue to innovate. So any businessman in the high-tech industry knows that you just can't develop an idea and then sit and harvest it for a long time. Unless you continue to improve it, you're going to be overtaken by someone else. I think in this area, we will see more joint ventures over time, both in terms of research and development and manufacturing.
Right. A lot of Chinese EV makers are now investing in Europe, and that's a good way for cooperation. Yeah. And my last question for you, I know you studied, you're also concerned about the weaponization of the US dollar. What do you think the impact of the the use of the U.S. dollar status as a foreign policy tool and its impact on the international monetary system in the future?
Well, I think a lot of the concerns have been exaggerated. Financial sanctions have been deployed for a long time, decades and decades. I mean, I worked on sanctions policies when I was an official of the U.S. Treasury in the 1970s and early 1980s.
Yeah, but there's also a dramatic increase in the past decade.
Most people bring up the case of the freezing of the assets of the Central Bank of Russia. That is not a unique case. We have had similar instances many times over the past 40 years where central bank assets have been frozen. Most of them occur in conjunction with military interventions. Not all, but most. And one can argue, at least I argue, that that disruption of the international order is so critical and so negative that it deserves a serious response.
But what do you think about the insecurity among many countries to trade in the U.S. dollar?
I don't see it. The U.S. dollar still maintains a very strong role in terms of the level of reserves, in terms of its use in global payments. And so it still has a very significant role. And that's not due to comments from me or somebody else. That's because of the breadth and depth of the U.S. capital market, because of U.S. monetary policy and financial regulation, because of the protections of U.S. law that provide greater certainty and security for investors in U.S. assets. And that, in that respect, the U.S. really does not have a challenger among any currency, even the euro. But it is not set in concrete. It could change. And this is what colleagues of mine and I have warned in the United States, that certain proposals that could lead to more disruptions in the U.S. economy and the global economy could, over time, cause a weakening of the role of the dollar unless we take care of our own business. But essentially, the risk is that that we would engage in self-inflicted wounds, and that then would diminish our role in the economy. And there's no reason for us to do that. If Donald Trump is reelected president, he has advocated policies that would be very dangerous and disruptive for the international economy, and would harm the United States and China and Europe and many developing countries.
How likely is that?
So we have over a year before the election, and so it's very difficult to predict.
Okay, we'll see. Well, thank you so much for sharing with us. And Jeffrey Schott, a senior fellow at the Peterson Institute of International Economics. And now we're heading for a short break. And after this, we'll be speaking to another expert from the European think tank, Bruegel. Stay tuned.
A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN.
You're watching CGTN's live streaming session at the Bund Summit, Insights on New Economic Forces. And now I'm very delighted to introduce our second guest today, Mr. Nicholas Varon, a Senior Research Fellow at the Peterson Institute of International Economics, also at the European think tank Bruegel. And I know you're also a co-founder of the think tank. Thank you so much for your time today. So Mr. Varon is an international renowned expert on the financial stability and European economic policy. So I'd like to have your take first on the stability of the global financial system as the global economy just emerged from the pandemic. How do you think of its resilience in the face of potential future shocks?
Well, first, thanks for having me, and I'm also very grateful to the organizers of the Bund Summit to give me, as a Westerner, the opportunity to participate in this conversation here in Shanghai. At this point, there are no acute concerns for global financial stability, but financial crises always happen out of nowhere and from unexpected corners of the financial system. And indeed, that's what we saw in the US back in March this year, when Silicon Valley Bank failed and other banks had problems. And this was completely unexpected because at the core of it was a supervisory failure of the US authorities, which frankly took, I think, all observers, certainly myself, by surprise, because there was a view that US authorities were better at financial supervision than what turned out to be the case. So I think if we see financial instability going forward, it will also come a bit by surprise. And let me turn to China. China has been leveraging its economy a lot over the last 15 years or so. And if you look at, for example, a simple, maybe simplistic indicator of bank assets to GDP, that has increased almost continuously in the last 15 years. So that increase cannot last forever. The question is, how will it change the trend? And that doesn't necessarily imply financial instability, but that's one of the big questions, I think, for the global financial system going forward.
A rising debt level is a global problem. In your opinion, how can policymakers work together to prevent such systemic risks?
I think we have institutions at the global level which are designed to facilitate that cooperation. We have the Bank for International Settlements, in which China is an active participant. We have a number of standard-setting bodies. Generally, China is very involved in these organizations. They're not really under the spotlight. They're very technocratic, very boring, very understated in terms of public communication and presence in the public space. However, I think we could improve from the current situation. So, for example, in terms of data sharing, in terms of providing statistics, not necessarily to the public, but even internally to these bodies, for example, within the Bank for International Settlements, there are some programs, there are some initiatives where basically all the large countries in terms of banking jurisdictions share that data, except China. So I think here there is scope for improvement in terms of potential, increase in the resilience in the system through that international cooperation.
Well, climate finance is also becoming prominent in the financial industry today. In your opinion, how can global financial institutions effectively incorporate ESG standards into their decision-making process? and to improve their coordination and in standard setting in some sense?
There's a very important new initiative, which is the International Standard Setting Sustainability Standards Board, ISSB, which has been set up essentially in the last 2 years. I think all jurisdictions should support that effort because it's from an investor point of view, from a corporate point of view, from an environmentalist point of view, this is the obvious solution. You need those international standards, and then individual jurisdictions can build on them, add their own building blocks, their own preferences, but the bedrock of this kind of disclosures should come from what the ISSB is producing. At this point, I'm not sufficiently aware of the debate in China. I know that in the EU, we're not where we should be in terms of adoption of the ISSB standards. Similarly, in the US, we're not where we should be in terms of the adoption of the standards of the ISSB. So I think it's a shared challenge for the global community. The solution is obvious. It goes against a number of political resistances in individual jurisdictions. These resistances should be overcome for the sake of the common good, which in that case is a fight against climate change.
Mm-hmm. And fintech has also revolutionized the financial industry. Talking about the digital euro, we know that Europe is exploring the idea, and China also developed its own CBDCs. How will that impact the future of monetary policies and financial governance?
I think we're still at early days. The concept of the digital euro is still being worked out. So it's too early to answer your question. I think it's probably a good thing that this workflow is there, if only to not miss an opportunity of providing a better service to European citizens. But I think there is also a need for managing expectations. We've seen it in China, we've seen it in other countries. CBDC is not necessarily an immediate game changer, and I expect it will be likewise in the Eurozone.
Mm-hmm. But how will digital economy play in this transition of financial industry?
You know, the financial industry has been using digital technologies forever. Since digital technologies came out, we've had, lots of things with databases, IT business, transformation of systems throughout the history of the last few decades of the financial industry. So I'm not sure there's something particularly new in what is happening now. Of course, the next wave beyond what the debate has been in fintech and CBDCs and blockchain in the last decade, probably the next step is artificial intelligence, but the AI revolution is still something in the working. It's still, again, a bit early to assess how transformational it will be, so I would see in that department finance as just one part of a broader story of the AI revolution. At this point, there's a lot of hype. We'll see how that develops.
Well, China and the EU are important economic partners, and we know that two countries will hold their economic and trade dialogue in Beijing very soon. As you
call the EU a country, which for me as a supporter of EU integration is rewarding, but let's not get carried away.
Yeah, sure. Well, and now you're traveling in China. What is your view on the future of China-EU relations, and how do the two countries manage their differences and promote more cooperation?
Yeah, again, the EU is not a country. It's a group of 27 countries that work together through common institutions. But it has bite. It exists as an autonomous set of institutions within that complicated governance, which I know is very difficult to understand, between the member states, the individual countries, and the European Union as an international organization with its own competencies. The China-EU relationship is evolving in the context of changes in the global relationships. China has been developing, for example, the Belt and Road Initiative for the last a bit more than a decade. It has also taken initiatives vis-à-vis the European Union, which had met a mixed reception in Europe, let's put it that way. I'm thinking in particular of the so-called 16+1 initiative, which is now a bit dormant, but has led to a lot of debate in the European Union about the intentions of China. But I think if you compare the EU-China relationship with the US-China relationship, it's at this point much less adversarial. The EU doesn't see the rise of China as a problem for the world per se. Of course, then there is a question of where will Chinese policies be in terms of the international policies of the Chinese government, and including in terms of what kinds of systems it promotes internationally. Here I think there are a lot of things to discuss. So what is important is that this dialogue takes place, that the leaders meet, that they can discuss the issues openly, that also there is a connectivity between not only the leaders, but the policy communities and the societies of the EU and China. So from that perspective, the reopening of China after the long period of zero COVID is very good news, and I hope that there will be more opportunities like the Bund Summit now for Europeans to come to China, for Chinese to come to Europe, and for joint discussions to be held.
Well, thank you so much for your time today.
Thank you.
And Mr. Rong, thank you. Now we're heading for another short break. Stay tuned.
A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN.
Welcome back. You're watching our live streaming session on CGTN, the Insights on New Economic Forces. I'm Guan. I'm now very delighted to introduce our third guest today, Dr. Jim Ma, the Chief Economist of Institute of International Finance. Thank you so much for your time today. So let me start with your take from the discussions at the Bund Summit today. How do you describe the mood?
Thank you for having me. So I think, frankly, it's a quite confusing time because things are changing so much. U.S. just experienced very high inflation, and the Fed is having trouble to catching up and to hike the rate after seeing as a temporary, transitory. Same in China, so we are seeing the economic slowing down in the past few months, and finally we're seeing slightly better, or shall we say less bad data in August, and we're seeing price is a bit more coordinated in September. So markets try to catch up, understand all this very rapid changing economic situation.
So talking about China's economy, the IMF predicted that China will contribute to 1/3 of global growth this year, but the economic recovery is not smooth, as we can see from the first half. As you mentioned, there are some positive signs. So what is your outlook of the trajectory throughout this year? Do you see the recovery momentum will keep building up?
I want to make 2 points. First is that our view of China's growth outlook, and second is how China can contribute to global growth. Our view is that China is still recovering, but very gradually and slower than people expected early this year. So I think for the whole year, China can manage to grow slightly above 5% growth, maybe at 5.2. Well, this is both good and bad. Good is that this will be higher than the official target, 5% set in early this year. So I'm pretty certain we can meet this target. The problem is that that's not a very high target because the base last year was so low, right? So it's only 3% last year, 5% this year. The 2-year average is still about 4%. So I mean, even with a low 5% growth right now, we're still seeing pretty high unemployment rate and very depressed price level. We just have a brush with deflation. So that means there's a lot of slack in this economy. We still need a lot more policy support to move the growth rate towards the growth potential. So there's still a lot of things to do. That being said, China is about 18% of global GDP. If the 18% of global GDP can grow to 5%, then it can contribute to so almost 1 percentage point of global growth. So that means about 1/3 of global growth still coming from China. Okay, that's good news. But however, that is a contribution from accounting point of view, right? You just multiply your weight by your own growth. So that's only from accounting point of view. For many other countries, our trading partners, what they want is not just China's growth, but how you can buy from them, how much you can import from them. But unfortunately, right now, China's import growth is pretty depressed, right? It was negative in July. And yes, some of it is price effect, but even in terms of volume, I think that China's importing too little right now. So our trading partners, especially large trading partners like Brazil, Australia, and some European countries, they want China to import more commodity, both hard commodities like iron ore, energy, and also soft commodity like food. And also, they want China to import more consumer goods. They also want more Chinese tourists, like countries like Thailand. Okay. The way you contribute to their growth, the global growth, is not your growth rate, but rather how much you can spend in those countries. So I think the global China trade partners hope China can spend more money to buy their products and to go abroad and travel there.
Well, sustaining a relatively high degree of economic growth is very important to China, and many economists say now it's at a crucial stage. In your opinion, what are the keys to revive growth momentum and achieve high and relatively high quality growth?
So this goes without saying. For decades, we all know in China, economic growth is the utmost job for us. And even in the United States, President Clinton used to say, it's a stupid economy, stupid. So without economic growth, we won't be able to lift the whole living standard of the country. So we need growth to create jobs, to increase our income, and also to reduce the risk of our debt burden. Because China's debt is very high, over 200% of GDP. There are two ways to lower the debt ratio and to reduce the debt risk. First is to just cut back debt, right? And second, grow your GDP, grow your denominator. just cut the back debt outright is very risky. That will push the economy into recession. That was what happened in Japan in the 1990s during the so-called balance sheet recession. When nobody borrowing, you cut back your borrowing, you push the economy into recession. We don't want to see that scenario. So the best way to reduce the debt ratio is grow the denominator GDP. That's why we need the growth. We also need a little bit more inflation.
Right. So, what are the keys to grow the economy, to grow the denominator? Do you think what role will innovation play in Chinese economy in the future? Because since China is pretty much pinning their hope on innovation driving high quality development.
Yeah. There are short-term issues, there are long-term drivers. Okay, in the very near term, we need to boost consumption. We need to see more investment. Yes, we still need more investment. Even the China investment is much higher than many other countries. Export is something out of our control because it depends on how much other countries will buy from China. I believe there's still a lot of things we can do to stimulate consumption. So far, the retail growth in China this year is very muted. I think it's in low single digit. So I remember it used to be in double digits, right? Sliding down to low single digit, even after COVID, after reopening. I found the multiple factors behind the disappointing consumption. One is the scarring of the COVID. People became more cautious. That's why you can see from the PBOC survey, people want to put more money into saving and cut back consumption because their expectation of future job prospect and income is poor, declined. But I think, yeah, that certainly is one reason. But more importantly, is the very depressed housing market. Because right now you can see the spending in tourism, restaurants are doing well. Restaurants full, tourist sites are all packed in the summer. But however, anything housing related are very depressed, right? Because if you're not buying a home, you're not buying furniture, or not buying material to do home improvement. So all the housing related are very depressed. So that is why we also need to hope we can stabilize the housing market so that we can stimulate housing related consumption.
Well, the Chinese government recently introduced a series of policies, and we're also seeing some signs of increased sales volume for the property market. And China is also relatively prudent in its policy response to this pandemic hit economy. But the good news is that we still have some policy tools. What is your comment on China's macro control policies?
That's a good question because I haven't answered my second part of the question, and basically you kind of alluded to my second part. So we need a short-term cyclical, counter-cyclical policies, right, to boost consumption. We also need a bit of more longer-term policies. Yes, I believe Chinese policymakers still have tools in their box. There are fewer tools than before, but still some tools left. I have to be very frank. The policy support back in June, July was somewhat slow, but too late, and it came out in haphazard fashion. Okay? But fortunately, we're seeing a better coordination in September. So when policy came out as a joint statement by multiple line ministries, right, to boost consumption and to support private enterprises, we see better policy coordination. That is good. So for a bit longer term, to sustain China's growth, we need to revive, in Kansas term, basically we need more animal spirit. So we need animal spirit so that households are there to spend and consume, and business people are willing to invest in their companies. I think right now China is growing below potential.
How much is the potential in your opinion?
It's a good question. There's a huge debate on what is the potential growth rate for China. It's like a measure where is how large a black hole. You cannot measure it directly, but an indirect way to see that, right? So for example, some people, some bearish analysts, economists out there say, well, China's growth potential has been lowered permanently due to a variety of issues, due to COVID, due to aging population, due to higher debt ratio, and urbanization, and so on. Yes, those factors are there, but in my view, the potential is still higher than the current growth rate. There are two evidences, right? If we are growing at the potential, then we should see a bit lower unemployment rate and also higher price. So when your CPI is only barely positive, like in 0.1, and the PPI is depressed in negative territory, and your youth unemployment is still elevated, of course you're growing below potential. Okay, so I think what I just mentioned, right now, if 3% last year, 5% this year, the 2-year average is 4, means the 4% is below potential. So I think that the potential should be somewhere maybe 4.5, 4.5 or 5%. But we need the policy support to achieve this potential.
Well, let's talk about China and the world, because it's also the theme of the Bund Summit this year. We know China is also pursuing more opening up, the high level of opening up, and China is also deepening its financial integration with the world. How do you see China's role in the world economy and also global financial governance in the future?
Yes, we noticed policymakers in China are making a genuine efforts to open up this economy, also financial market, to welcome global investors. So in fact, I personally led a pretty large investor group to Beijing and Shanghai in the past 4 days. And we met policymakers and we also met the local investors. So we can feel the warm welcome by the policymakers in the past few days. But however, I think to convince the global investors to come to China, there's still a lot to do for two things. First is that it's very unfortunate. Most of our global investors came to China in 2017 and 18. Then they suffered a down market for the past few years. So if you came to China, invest in China in 2018, you lost probably 25% in the past 4 years. While the market rose so much in the other markets. So we have equity investors came to us. Why should I invest in China if I can invest in the US stock market? And then we have bond investors, fixed income investors say, well, why should I invest in China? I can pick up a much higher yield, say, in Indonesia. So China needs to do two things. First is that we should not only improve ourselves from our economic performance, do better than in the past few years. China also needs to compete with other countries for investors. You're not only competing with yourself, you're competing with the United States, you're competing with other emerging markets like Indonesia, like Singapore. Okay. Second is that Beijing needs to do a lot more communication with the global investors because people haven't been here for 3 years. Many people came to the Bund Summit. It's the first time in China in 3 and 4 years. They felt they're out of touch with China. So they need to do their homework, and the policymakers in China should make doing their homework a bit easier. So the policy communication should be much more direct, much more straightforward and open.
Well, thank you so much for sharing with us. And this is Dr. Jin Ma, Chief Economist of Institute of International Finance.
Thank you.
Well, you're watching our live streaming on CGTN's Insights on New Economic Forces. And that's all for today. And tune in tomorrow as we will have a live coverage of the opening ceremony of the Bund Summit. See you next time.